Okay, so thank you very much, guys, for this evening. Hope all you're doing well and you had a beautiful day. So yeah, we are on now to kickstart our mentorship program in terms of focusing on ETFs and see how we can go around it. I just feel like I have to repeat this class because it's very informative, though I'm just going to do the simple stuff today. But I think at the end of the month, I will have to repeat this class again as far as others are unable to join. I don't know, it's either electrical problems or whatever commitments might be. So, but other than that, we are going to start, and tonight's subject we are going to focus on ETFs. So I will start by analyzing simple things for tonight's masterclass, and then next week I'm going to add more, which next week that's why I believe some will be a bit complex, but I'll try to explain more and more. But tonight I just want to share simple things, and also we're going to pick up our top five ETFs that we believe that are going to do well this year, or they're going to continue to do well this year. So I know some of you we have done this before to explain what are ETFs, but I just wanna reverse a bit to explain again that the difference between ETFs and equities is that ETFs is a collection of baskets of shares. Okay, let me. It's a collection of basket of shares rather than individual stocks. So you are dealing with an individual company. So when you deal with ETFs, you have a lot of advantages that includes the performance. That sometimes you'll discover that three or four companies might not be doing well in that season, but you have others that are doing well. So they give advantage to your basket to perform. So when you have equities where it is individual stocks, when that individual company is not doing well, it means your investment is also not doing well. So that's the struggle when it comes to equities. I'm not saying equities are bad, but when you compare equities and ETFs, you'll discover that ETFs, they have a lot of advantages compared to equities, because equities you only depend solely on one company and its performance. I was doing analysis based on equities before I dwell more on the ETFs. I was doing analysis on equities. So if you have any company that you wanna invest in terms of equities, you can just send me that company privately, then I'm going to break it down for you. But also going to have sessions where we break down companies. But if you have any company that you're targeting, you can just share that company with me. I'm going to explain to you what's happening in that company. And I believe when I have time, I'm also going to share more analysis on Facebook in terms of breaking down the company, how it has been performing. So yesterday was just because I was so curious about the issue of Capitec. I was just saying Capitec because Capitec is one of the stocks that is always on high demand. Checking 8 Best where it started 2002, the performance, the gap there, and then discovered that those guys have grown, and now where we are, even though the share is on another level, there's a big room for growth, which is expected to grow higher this year again in the year 2025. So I will just share some of the breakdowns of Capitec. How are we predicting their growth, or how are we expecting their growth? But those are the companies that we are expecting to see more growth in them. So I break it down, but I was just passing. I was looking, okay, Capitec is one of the companies which are expecting them to grow and then grow by this percentage. So if you have any company that maybe you are aiming at, just share with me, then I'm going to break it down. But what I can tell you, it requires a lot of time to break down a company. It takes a lot of time. You can spend a whole day just dealing with one company. So just something that you do now and finish it. It takes a lot of time. So you will need to be patient with me when I do those breakdowns. So, but other than that, we are all ready to do it. So going back to ETFs. So, okay, before I jump in, is there anyone who have invested in Capitec shares? You can raise your hand if someone have. Okay, it seems like none of you have invested in Capitec shares. It's okay. So okay, going back to the subject of the ETFs, we wanna check how do you pick up an ETF, because sometimes people they just go to ETFs and they come across something that seems to be good and say, hey, this can be a good company or a good pick. You just pick based on how you feel or how you see that thing. But there is a lot that one needs to understand before picking that kind of ETF. So it's a question of how do you pick that ETF? How do you pick that ETF? So when you look at your screen, I don't know if you're able to see what I have displayed, if you're able to see it rightly on your screen, because we'll be working around that. So if you're able to see what I've shared on the screen, you can just raise a hand so that I'll proceed with you. Okay, thank you. Thank you very much. So this is a website that helps you to analyze ETFs. So I'm going to share the website on the group, then you will be able also to use it. Easy to use it, not complex like others. So you see it is written ETF Finder, compare ETFs, learn ETF news. So what we're going to do, we're going to go straight to the ETF Finder. We're going to enter here in the ETF Finder. So when you look at the ETF Finder, now you see this view. So you see it's written 99 ETFs available. So we have 99 ETFs available. So when you have this 99 ETFs available, the question will be, then how do you pick the right ETF? How do you pick the right ETF there? So if you wanna put if you wanna pick an ETF there, it's simple. You need, number one, you need to define your goal. So number one, you select an ETF based on your goal. What is your goal? What is it that you want to achieve with that ETF? For an example, number one, there are people who are investing in ETFs with the motive of gaining dividends. So if your motive is to gain dividends, then how do you find uh, ETFs that they pay dividends? That's our first part we have to break down. So the first thing, you have to define a goal. What is it that you want to achieve in terms of investing in these ETFs? So if your goal it is to earn dividends, I was reading somewhere someone says guys who are investing in dividend driven stocks or ETFs, they don't care about the performance of the company, they care about the dividends. So whether you must also define what is your goal. Are you investing with the sole purpose of earning dividends? If you're investing with that sole purpose of earning dividends, then now we have to come here and pick companies which are able to cater to your need or to cater to your goal, because your goal it is to get dividends. So now let's now check, going to the screen, how do you get that? So I'm going to be very slow. So now let me screen up. So you see you come here. Okay, you come here. Let me just check on my screen. I'm still okay. We're still on the same page on the screen. I'm using double screen, guys. So be patient with me. So you come here. So you have to come to select class. So when you come to select class, we're going to select equity, and then we close, and then we are going to, now because we are going to, okay, we're not going to fix it on one space like South Africa. Let's see, fix it on global, because the aim is dividend. So and then coming here, pay dividends. And then when it comes to pay dividends, we are now left from 99, we are now left with 14. But what we can also do, we can also, okay, it's fine. Now let's check on these 14 ETFs that are are paying dividends. As far as you see, we have moved from 99, now we're left with 14. These are the 14 ETFs that pay dividends. So we'll just come here again, and then you see here they are. So I just wanna just scroll down. I just wanna check the one that I always love to advise people to invest. Let's just go to, okay, let's just go to this one, global DV tracks. So global DV tracks, we just open it, you press learn more, and then where do you find their calendar in terms of paying dividends? You just scroll down like this. So you see these guys, they pay dividends. I don't know if you're able to see on your screen. Let me just come back to where you are. You see, okay, here we are. I'm sure you're able to see. So these guys, they are paying dividends between June and December. They pay between June and December. So you're going to expect to receive dividends from this company twice in a year. So because I want us to be broader, as far as I've said, some people, they invest in these things solely to get dividends. What I'm going to do, I'm going to go back again to here, to the same thing that we are dealing with here, and then reset. I just want to reset the filter just to get all of them. We have 99, and then we just come again here on dividends. Just pay dividends, and then we close. We have 59 that are paying dividends out of the 99 without any region or anything else. We have 99 which are paying dividends. So from all these 99 that are paying dividends, you have all these companies that are paying dividends. But you must also check something. There's something which I want us to check here. You must also check the expense ratio. I'm going to explain to you what is an expense ratio. I'm going to reduce it. Remember, I've advised you to invest on Citrix All Cap Share. This is the Citrix All Cap Share which I've advised you to invest, that pays a lot of dividends. So we're going to enter in it, and then let's scroll down. First, we just want to check how many times are they paying dividends annually. So I'm sure you are able to see the calendar here, guys. Just raise your hand when you're able to see the info that I'm sharing on the screen. Okay, thank you very much. So you see their calendar in terms of, we don't have dates, we just have months in terms of how are they. So they are paying on February, April, June, August, October, and December, which is 1, 2, 3, 4, 5, 6 times. They're paying dividends 6 times a year. So obvious guys who are driven, their ambition is dividends. They will go also for companies like this because they are driven by dividends. But the other advantage with this ETF is the fact that it holds also all these good performing entities, and you can also look at it in terms of performance. It has been performing well. So while you are making money through dividends on this company, also have an advantage in terms of getting a growth, because this company is also growing. It has been doing well. So how do we see the performance of the company? Though I won't dwell much in terms of how do we see the performance of the company, I just want us to look at some few things here. Okay, you can also download the fact sheet. The fact sheet is going to explain to you everything about the company, but you can also go out of this being able to read more and more. So let's just check it in terms of performance, and then here we are. Here's our graph in terms of performance 1 month. Let's just scroll it to 6 months. When we scroll it to 6 months, the last price as the JSE close to date was 42.95. Let's just check it here and then be able to see how it has been performing. I just want to push it. Okay, I just push it to 1 year. Okay. 80 September. Okay, it's still. Let me just come here. Here we have okay, 11 March in 2024. The price, it was the 6 rand 89, which it means it has been ranging around 30 rand, 36 rand, because in 2024 5 March it was on 36 rand 16 cents. So now we are in 2025 and we are sitting on 42 rand 95. So it means while you are enjoying the dividends that you are getting from this company, you're also realizing growth from what you have invested. I understand sometimes we have this ambition of saying we wanna diversify more in terms of having shares in different companies, and that's part of the strategy when it comes to investing, to diversify. But I want to also advise that in diversification, don't overdo it unless you have a big capital in terms of doing it. In terms of overdoing it, I mean, let's say for instance you have 1,000. With that 1,000 you decide to buy from company A, B, C, D, E, and then F, G, H, I, J, K. You have 10 companies. You have used your 1,000 rands to buy in 10 companies. So the value of your growth, it will be a bit slow, and the value of your dividends will also be a bit slow. I'm not saying invest in one company, but don't overdo it in a sense of now having invested in 10 companies with less capital. Let's say for in company A, it was 10 rand, 10 rand, or 50 rand, 50 rand. So if you have taken all that 1,000, maybe put it in Centrix all cap share, the value of your dividends, remember, the value of your dividends is counted based on how many shares do you own in that company. So if now you have more in this so-called ETF, let's say you have, as an example, let's say I have my 30,000 in this Citrix all capture with the sole purpose of saying I'm doing this for the sake of dividends, then it means the value of my dividends will also be something that is in heck, a better return compared to when I'm having 100 rand or 50 rand. And I'm not disadvantaging guys who are putting their 50 rands, their 20 rand. Obviously, when you study the atomic habits, they will tell you that those small changes, those small investments which you are making are going to make sense more. But what I'm trying to illustrate here is the fact that when you do the diversification, don't overdo it. Let's say you say, okay, my plan is to okay, I'm going to put 2,000 here, 2,000 here, 2,000 here, and I'm going just to own like let's say for the whole 2025, my game plan is just to own at least 5 ETFs. My focus will be 5 on these 5 ETFs. So what I'm going to do, I'm going to replenish these ETFs. So if I put 2,000 here this month, 2,000 here, 2,000 here, 2,000, I'm going to come back again, do the same thing to replenish this, so that the value of my ETF, it will also bring value in terms of what I'm going to receive when I receive the dividends, rather than to split it to many. Because sometimes when I open other people's profiles, they have a lot of these stuffs, but when you just look at the value is low because they have done the diversification too much. So they have done the diversification too much. So it's good to do the diversification, but when you do it, make sure that you don't overdo it. So this one, the Citrix all capture, the performance good, dividends paying 6 times a year. So if you're one of those people whose goal is to invest in ETFs that are paying dividends, this is one of the good ETFs that you can look at. This is one of the good ETFs that you can look at. When I look at my screen here, where I do analysis, it's also one of those companies that is listed there, because I have a list of companies that have performed well in the year 2024. All the ETFs that have performed well, I have them here on my screen on this site. So it's part of those companies. I'm going to read for you all companies which have performed well, and I'm also going to share 5 of those ETFs that I believe that if you invest in them, you are going to realize a big growth. So, okay, let's go back to it. Citrix all capture again. So, okay, find size of this stuff. So I'll share about these stuffs later. Let's just go back to okay, to another one. We can check another one in terms of dividends. All of these companies, I mean ETFs, they pay dividends, but also don't just skip into something because they say it pays dividends. The effects which you are going to look, and I'm going to teach you, explain to you those facts which are critical in terms of looking. Don't just jump in. Let's check the let's see iWorld, but I also want to check DV I want to check DV. So here the focus is to focus on companies which are paying dividends. So this one is MSC World FET, which is one of the best which is one of the best performing ETFs. So let's check how many times are they paying dividends. We wanna check how many times are they paying dividends. Okay, scrolling here. So you see this one's, when you say dividends, it say NA. It means these guys, they don't pay dividends. But when it comes to performance, this company is doing well. So every time you want to invest in a company, then you check this this part, and it says dividends NA. It means this company does not pay dividends. So when you invest in it, in your mind, you must always remember that I'm investing in this solely based on the motive to realize growth, which are going to realize capital growth. You're not expecting any dividends. And I'm not saying to you, invest only in companies that pay dividends. You must invest in companies that also bring huge growth, like the MSA World. Those, okay, I don't know if you guys, you were part of the investing club around 2020 there, but the guys who were part of it, they know exactly that the MIC World, back then it was ranging around 20 rands there, around 20 rands. But when you look at it today, when the market closes, you just check the price. It's sitting on 104. So the growth is really great, sitting on 104. So which is something very, very powerful. So there is this part here, guys. I'm sure you're able to see it. It's called TERE. TERE. So I just want to also explain this part for you so that you will be able to understand and make the right moves. The TER. So the TER here, it says 0.35 here on this one. So it is the cost of owning the share. You know, when you go to banks will charge you interest based on your or whatever you have invested. So this is the cost. This is the cost of owning this ETF. So the lower the cost, the higher the advantage for you. Why? You won't pay too much cost in terms of you having these guys managing this ETF for you. So in banks, the interest rates are very high. But here, you can also play around that thing, because that thing helps you also to see which companies that are having low TER. So it's easier to do that. I'm going to show you how we are going to do it. So let me just check DV. I want DV because DV they also pay dividends. But there is something which I want from DV because you explain DV. Where is it? I'm just going to, okay, DV. It's a DV plus here. Okay, I don't want DV plus. I want DV. Oh, okay. There is something which I want from David tracks that I want us to see, because it's way different to the others. Okay, it must be here. Okay, global David tracks. Okay, here it is. So let's just enter global David tracks. So let's read the description first before we go to the dividends. Okay, the description says the index is designed to simulate a portfolio and S&P region. Dividend analyzes indices with all allocation representing regional and neutral exposure to the excluded countries as they appear in the S&P Global 500 and large mid-cap index. So these include regions in Europe, Canada, Pan-Asia, and United States. So when you look at these guys, they are paying dividends twice a year, which is June and December. So if you invest in them, you are going to expect dividends from these guys twice a year. So when you look at this company, it's based on large mid cap, when you speak of large mid cap indexes, you're speaking of companies which have grown, companies which are established. So they include Europe, they include Canada, they include Pan Asia, and they include United States. So when you look at it, as it does not include stuff like your South Africa and the other African countries which are also trading. So when you look at it, you look at it in terms of the advantage, in terms of the economy, like how the economies are being underlined. So now we have crisis in Africa. As an example, let's say we have crisis in Africa. The company is doing well. It gives more advantage. I remember during the COVID time, guys, we have bought ETFs and also we have used their US account, because you have noticed something in your Easy Equity app. There is also the US companies that you can buy, a McDonald's or Coca-Cola. They have a lot of advantage because the rand was very, very down. So they took that advantage to also take more of what they've invested and bring it to the country, because that time the economy was very bad in our side. So it gave them advantage. So when you invest in such ETFs, it's a balance of where you are and where are they. Looking at countries like Asia, the United States, and other countries that are included there. You look at it in a sense, okay, this one will play a major role. Like now, there is a conflict between the reigning president of America and also the Chinese. So it's a conflict of whatever is going to happen here. If this one decides to cut the connection, it means the economy, they're going to struggle, both of them, because they depend on one another, whether they like each other or not. But it gives advantage to buyers to say, okay, this is a great advantage. There is an ETF that I want you to is part of my top 5. I want you to buy. The reason why I want you to buy that ETF is because it contains countries that are developed and also countries that are in the process of developing. Remember, the development of a country gives an advantage to the economy. So it's a must way to have that ETF. And that ETF, it goes with another ETF. I'm going to give you both of them because they are balanced. The other one, it contains all developed countries. The other one, it contains countries which are still developing. So you have a balance. The other one, they're already established. The other one, they are in the process. So even if you can have one of them, but for you, I want you to have both of them so that you'll be able to have that balance. So if you are going to invest in these dividend checks, it means you are going to expect a good performances in terms of countries like the US. We don't know currently what's going to happen to their economy as far as they're trying to cut off everyone. We don't know what's going to happen. So if they make wrong decisions, it's going to affect their market, which means most of those stocks there, they're going to go down. So we are now playing around those decisions which are making. Where are they leading them? So if you invest in such, it also gives you an advantage that you are going to get the equity at the lower price, but in terms of returns, you're going to have good returns in the long run, because when you are investing, you must also have the bigger picture, not where you are, not just to invest today and then tomorrow expect bigger growth, but you look at it in a long perspective view. So, okay, let's come back again to the screen. Let me just reset my filter. As I've said to you that the expense ratio, which is the total cost of owning a share, the more it's lower, the more you are able to benefit more. So what you can do when you do the research, you just open here You see it's on 0% and to -1. Why do you do? Let me just drop it to 5. 5 okay, let me just push it a bit again. It's on 3 now. Okay, I just want it to be between 4 and 5. It's a bit here. Okay, this one I just place it on 3. So when I place on 3, you are already left with 48 companies. So now let's check. Let's say you wanna we spoke about dividends. Now let's check. Let's say you wanna invest on the best performing ETFs based on the region where you are. So if you wanna do that based on the region where you are, you're going to come here as a class. You press equity. Equity means stocks, and then you come to the region. We just wanna focus on the South African ones. And then from the 99, we are left with 10. You see the ratio is 3. And then we are focusing on South Africa. We are left with 10. So when we are left with 10, we just come here. So you look at them. So we have the top 50 here, ETF, which is also one of the best to invest in, the top 50 here. And then if you wanna to learn more, it's good for you to also to read the description. What is it that they are dealing with? You just come here and you say the aim of the 10 times top 50 ETF is to track the S&P South Africa 50 index closely as possible. The index, which constructed maintained by S&P Dow Jones indices, provides exposure to the largest 50 companies on the JSE. So these ETFs, it contains the 50 largest companies on the JSE by float adjusted by market cap. So okay, let's go to it and check the performance. Okay, the performance, let's just go to one year. I just wanna to get my indicator. Okay, the indicator. Okay, around 2024 April. Okay, let's bring 21 March 2024. It was 28.94 rand. Today it's sitting on 33.94 rand. That's a good performance. And it's cheap in terms, you see the TRE, the cost of owning the shares is 0.25, which is cheaper to own it. So all the growth is good, because when you compare where it was and where it is now, the growth is very good, because it was March, it was on 28 rand, and there was a time where it was even lower than that, which it was. Okay, going back. Okay, we have to go to max if we want to go back to that. It was okay 2015. It was sitting around 20 rand 11 cent. It goes down. I think here it was during the COVID season. My indicator, sometimes it goes in and goes out. Just want to use it to track here. Okay, yeah, 2020 it was around 20 rand. So now it has grown up. So you look at this company, does it pay dividends? Yes, it does. It pays 4 times a year. I'm sure you can see on your screen, it pays 4 times a year. So if you are also driven by such ambitions of investing in companies that pay dividends, it's also one of the companies. It pays on March, June, September, and December. So if you're also driven by ambition of dividends, it's also one of the companies that you can invest in, as are going to receive dividends 4 times a year. As I've said, when you do those diversification, please make sure that you don't overdo them, so that you'll be able to realize the value of your investment, or the value of your, what is so called, the value of the returns when you receive those dividends. Because if you put 50 rand there, 50 rand, and you're owning almost 50 companies, and all of them they are 50 rand, you're going to have a problem in terms of realizing the value of what you are investing in. So lower TR and paying dividends 4 times a year, which the highest is Citrix all captures as far as they are paying 6 times a year. So this one they pay 4 times a year. So if you are one of the guys who are driven by the ambition of just getting and getting and getting what is so called just dividends, this is one of the companies that you can pick. So you read all this info, you check all this info so that you'll be able to make that right decision. So let me just go back again to my screen. Just go back and pick another one. Going back. Okay. We also okay, we did DV tracks. We are still in South Africa. So what you can also do now, because you wanna get the one with lesser, I think it's okay. They have reset. Okay, they have reset my. Let me just say it again. We just wanna get the one with lower TR. We'll put it on 4%, and then we just come here, South Africa. I still right. Let's just put it in South Africa. What you can do, because yeah, they are 15 with less. What you can do, you can just tick here FNB top 40. We can tick Citrix top 40. We can come all capture. We can come. Okay, what else is left here? Okay, Signa top 40. And please, guys, don't invest in these companies that are return 6. These companies that are return 6. We just explain the disadvantages of the issue of the 6. Just open the other. I'm using 3 screens, so just open the other screens. Okay, the disadvantage of this company's return 6 is this. What we're going to learn, you can also check articles about 6 ETFs. So number one, the disadvantage is the potential for underperformance. So the shareholder weight approach might not always align with the traditional trends in market. So these guys struggle in terms of performance. Number 2, limited availability. Number 3, tracking error. Number 5, they are complex. They are very complicated. And then number 6, they are very performance variability. So if you see 6, it's out of my tick. For me, it's out of my tick. I don't want to be in this, because as far as they are complex, they are also low in terms of performance. So okay, FNB are top 40. Okay, so what we're going to do, and then the 10 times top 50 ETF, we come here and to it. So what you do, you just come here, say compare ETFs, you press compare ETFs. Here we go. This thing is going to give us all our ETFs, and then here they are. So you see, let's check the TR in all of them just to get the lowest, but you can buy any of them. The TR in top 50, it's the TR. Where's my TR? It was here. You also check the TR. It's here. It says 0.25, and then from the FNB, it's 0.12, and then from the Signa is 0.22, which the lowest here, the lowest is FNB, because FNB is 0.12, and then in a year it's 17.45, this one 17.44, while the Signa is 17.44, while this one of 10 times is 18.08. So the lowest way it becomes what the FNB. So if you check in terms of performance, week 1, let's just compare the week 1. This one of top 50, it was sitting on 0.78%, while the FNB 2.42%, and then Signa 2.42%. So the FNB it has the lowest, but in terms of performance it has the highest. And when you check it in a month, it's sitting on 2.75, which is the one the Signa, it's on 2.77, the highest. So in terms of performance in monthly, FNB was number 2, the Signa was number 1, the top 50 it was number 3. So in terms of a year in the performance, the top 50 it was 18.08, which FNB it was 17.45, and then the Signal 17.44. And in terms of performance, the top 50 it was number 1 in a year, and then the FNB it was number 2 in a year, and then number 3 it was the Signal. So you can see that these guys, they've been performing well, though we're just looking which one is the cheapest in terms of maintaining it or having it, and also in terms of the returns, or how are they like they've been performing. So you can see that the top 50 it has been performing well, and the FNB also it has been performing well with less view. So you can also check the fact sheet, which is going to give you a lot of information. But because here we don't have too much time, we're not going to check the fact sheet. We're just going to leave it as it is. But if you wanna check it, you can also go to it and analyze those facts, which is going to require time to do that, but it's worth it to sit around and check it. So, okay, I hope up to so far you guys you are able to convey what I'm bringing on board, and you're able to comprehend it. I'm not as complex as as others. So when you look at this, we now want to move from just checking the locals. We just want to check the whole world. Want to check ETFs that are based on the whole world performance. So what you are going to do, we go back to the same analyzer. We go when it comes, we just say reset filter. When say reset filter, everything goes back to 99. You see now we're on 99 where we were sitting on 99. So what is it that we're looking for? We're going to asset class, and then equities, and then close, and then come region. Instead of South Africa, we're going to press global, and then we are left with 21, and then we go again to the expense ratio, because for me the expense ratio is also key. We want the lowest, we don't want the highest, we just want the lowest, and we just reduce it to 5, please. I want it on 5. Okay, sitting on 19. Okay. Okay. It's fine, I can leave it there on 19. It's fine. So now we see, okay, we are here on like we're now checking global, whether China, US, Asia. These ones of global infrastructure, I can't pick them because they are focusing on infrastructure, the healthcare. These are just infrastructure. We're just going to skip them, and we're just going to look at the ones which are okay. Because I have less, okay, I have pressed it to less is okay, to less class is okay. What I'm going to do, I'm going to come on the other screen, which is not with you here. I just want to go to, okay, I'm going to look on the other screen. So on the other screen, I just want to read for you the performance of these ETFs, because we want to pick ETFs that are what we believe are going to do well globally. So I'm going to give you 5 of them. But now let me just read for you the performance of these guys. So we have the 10 times South African property income exchange traded fund, which just performed well. It is on the 1.69%. So annual return is 4.19. We have Centrix Collective Investment, One Invest SA Property ETF, Centrix FINI ETF, 10 times exchange traded fund scheme, which we're using there, Centrix Manager Pty Ltd, Centrix Collective Investment, and S&P 500 tech info. So there are a lot of them. Because of time I won't read, but if you want them I can also copy and paste for you this whole thing so that you'll be able to see them. So the companies which I have picked based on their performances and believe that they're still going to do more or to do better. Number 1, it's okay. Let me just reset my filter here. Reset. my field. Okay, thank you. Number one, we have the Invest MSC World. Invest MSCI World Index ETF. So the Invest MSCI World Index, it contains 1,519 shares in it. It contains 1,519 shares in it from 23 developed countries. So it has 23 developed countries in it. It has 23 developed countries in it. Okay, it's one Invest MIC World. One Invest MIC World. So here it is, one Invest MIC World. So it have 1,519 shares from 23 developed countries. So here it is, one Invest. That's the number one that we're sitting on. This okay. It's 102. Let me just scroll down. Okay. February 2024, it was sitting on 88 rand 73 cent. Now, currently, on 2025, it's sitting on 103.55. So, this is from all the developed countries. So it's a must to have. In 2022, it was sitting on 58 rand 29 cent. So you can see the growth. In this campaign. 2019 was on 42 rand. So you can see that it has been performing well, because it contains, when you buy this ETF, you are buying 1,519 shares from 23 developed. These are already developed countries. All these developed countries. So if you want to break down those developed countries, you can check which comes. So when you check on dividends history, say reinvest dividends. So it means in this company, your dividends won't come as cash like others. When they come in, that cash is going to be reinvested. But this is one of the best ETFs in terms of investing. Like guys who are also using ETFs to prepare for their educational investment for their kids. They can use it because their goal is to focus on long-term goal. So it's one of the best, because let's say your child is still maybe in their grade 4s, grade 3s there, you still have a lot of time there that if you invest in it after some 4, 5, 6 years, the performance will be on another level. So it's one of the ETF that you can use to say, okay, I'm using this ETF with a long-term view. It's not just a short-term view, but with a long-term view. So it's one of those ETFs that you can use. So okay, let me just close this. I just want to go origin. We just want to go to the second one. So the second one is Core Share Total World ETF. Core Share Total World ETF. Let me just check it. Core Share Total ETF. Core Share Total ETF. Yeah. Even if we don't get it here, we can also check on the other side. Core Share Total ETF. Okay. It means we'll have to search it on the other side, but you can note it down as Core Share Total ETF. I'm just going to give you what is it that you find on that ETF, the Core Share Total ETF. So on the total Core Share Total ETF, you're going to find 10,000 shares. When you buy that bucket, you're buying 10,000 shares with 49 developing countries. With 49 developing countries, so they are still in the process of development. So with 49 developing countries and other countries which are already developed. So number 3 is FNB Global 1,200. FNB Global 1200 is down here. FNB Global 200. Here it is. FNB Global 200. Here we go. So the FNB Global 1200, it contains 1219 shares with 30 developing and developed countries. So it's also one of the best performing ETF. Those who have bought this ETF, I've had someone texting me and say, "Oh, thank you, I've bought that ETF. It has grown. It has been performing well in 2024." Let me just come here, my indicator. Okay. On 20 February 2024, it was sitting on 88 Rand 11 cent. Now we are sitting on 103.41 cent. We're expecting it to grow more. In terms of dividends, they pay quarterly. They pay quarterly in terms of dividends. They pay quarterly. So their growth has been so great. So it's FNB Global 1200 with 1219 shares in it with 30 developing countries. So on number 4, we are having Cetrix MIC Emerging Market. Cetrix MISCI Emerging Market. It's no, it's not from, it's down here, it's down here. Okay, Cetrix good must be down here. Okay, imaging, want the imaging. The all capture I've already spoke about the image. I want the imaging market. Okay. Okay. Citrix momentum. Okay. Okay. Here's the emerging market. Here it is. Citrix MSI emerging market. Here it is. Okay. So let's scroll down. It does not pay dividends, but in terms of the emerging market, this one is also one of those companies that have performed well during the COVID time, and with the cost of owning it is 0.4%, which is very, very less. So it has been one, like I've been watching this company during COVID time up until now. It's one of the best companies. So the emerging market, it goes with the MIC world, the one which is on number 1. So the one on number 1 is with developed countries. This one is with the emerging countries that are in the process of developing. So on this one, that's where you find the companies that are from your Asia, like your China, your all those guys who are out there trying to build their economy by themselves. So this is the ETF that you can buy, because those guys, whether we like it or not, they are coming well in terms of developing their countries, and economical they are very competent. So if you buy this one, you're buying those guys that are emerging in terms of economy, and we're expecting a high growth. We're expecting high growth in terms of those countries, and as far as now the battle between them and America continues, and it seems like there will be no unity in them. We're expecting them to do more in terms of developing themselves, because those guys, they don't want to be connected with the other countries, like being enslaved by America. They just want to function by themselves. They want to be independent. So these are emerging countries. So when you invest in this one, you stand a good opportunity as far as these countries are developing and they're coming all right. Your investment will also grow as far as they are growing. So the last one is the Cetrix MIC World ETF. MIC World. I'm sure this is most of the investors, they have this one. Like everyone start with this one. Whenever they buy, they start with MIC World. Where is it? I think it's up here. It's up here. Okay. It's up here. Just a bit, guys. My laptop battery is low. Let me just switch off and switch on some things here because I'm using 3 screens. I just wanna be as quick as possible. Okay. And to this. Okay, we are now fine. Okay, let's just check the MIC world. I've switched off the other screen. Now I'm using 2 so that I'll be able to move quickly. The MIC world. The Citrix MIC world is, it must be here. Because that's the number one that I've also learned investing through it. The MIC world, not the MIC China, MIC India. Here it is. Okay. It is. Okay. So we just wanna go to a year performance. My indicator must come here. It must scroll. Okay. Before Valentine's Day 2024, it was sitting on 88 rand. Now it's on 104. So if you have already invested in it with, but during those days of COVID, these things, they were around 80 rand. None of them, they were higher to 50 rand. They were around 80 rand, and now they go to 104. The long-term investors now, they are starting to realize the real growth in terms of this. So the MIC world is one of those ETFs that it's a must-have. It's rare to find someone's portfolio without this ETF. So these are the top 5 ETFs which I have picked that we need to invest in. But I'm not saying these are the only ETFs that one can invest into. You can go out there, as I've said, you need to define your goal. What is your goal to invest in this? You are investing in terms of performance, you're investing based on dividends. So you're investing based on dividends. You just follow the instruction which I show you. Just check there, but there are some which are you don't need to invest in them. As I've said, that one of 6, don't invest in that, and the other ones which are managed by entities, you don't invest on them, but invest in equities that you personally, they just charge you those 0. You just reduce those TR that you don't pay too much. Just pick those ones that are going to pay less. But if you are aggressive as an investor, you can also check on those ones and say, I just love it, even if it's on higher, I just invest in it. So yeah, thank you very much. I don't know if there is anyone with a question here. So if you have a question, you can ask. I hope I was not complex. I was pretty easy. So if you have any question, yes, Boise, where, ma'am, yes, you can open your mic and ask.
Sanbonani, thank you so much for